Hello traders, this is going to be a video about DAX and about S&P, and in the first part of this video I'm going to cover the day trading opportunities that we had on DAX, and later in the second part I will go through large time frames on both DAX and the S&P. And this in front of us is the updated chart with adjusted zones that have been posted before the open. And this here was another news-driven move, and this time it was about arrest of the Huawei CFO in Canada, and that was the excuse basically for the market to drop. And as I said in this prep that was also posted with the picture of the chart, that difference between rallies on good news and dumps on bad news. What is the difference? The difference is in the market environment, because when the environment is bearish, like now, usually these rips on good news are going to be retraced. They're going to be perceived as shortable rips, and the dumps on the bad news, they could retrace partially, or they could just, market could just continue to go down, and that is the sign of weakness. And our job is, to conclude in this pre-market what is going to be out of those two possibilities. So also I said that the zone starting from this 11,090 could provide sellers reaction. We had these two gaps below from December 2016, so basically second anniversary is today for these two gaps, and both of those got filled today. And note that when you have this chart and when you observe that this here as a main support zone around 11k, that is basically has nothing between it and the second zone, basically a 200 points hole, where only the references that you have was this first gap from December 2016, then a reference of minus 20% from all-time high, then this gap from December the 6th, and this was the bottom and this was the top of the gap. As I said, when gaps are large, top of the gap can also act as support. Now let's go to the charts and see what kind of opportunities we had for today. So this was this gap down, this huge gap down, and this movement here was the movement in the pre-market, and our first shorting opportunity was basically right after, right in the pre-market, or right after the opening bell, because by this time it was pretty much clear that the market doesn't really making any effort at all to fill the gap. This kind of movement in bearish environment usually means that it is a bear flag, and we had right at the open we got this first gap filled. Today DAX has filled 3 gaps. This one is current gap, fresh gap from November the 20th, and it was filled right after the open. I will remove it now. So there was our first opportunity to go short here with the stop above pre-market high. Targets would be around pre-market low and this first zone. On this first zone we had a reaction. I said that in the prep, that how will market react to this zone will be the tell of market strength, and we did have a reaction in pre-market. Now this is a CFD chart with they use FXCM feed, and again today they didn't really show this pre-market low correctly. It was around 11,015, as you can see on the futures chart. Now let's just turn off these lines for session breaks to observe is this better. So here it is. This is the pre-market low right here, and this is the gap. So now this situation you can clearly see on the futures chart. And then market goes up and doesn't really make any effort at all from this pre-market high to fill the gap. It just instantly is going down. That is a big sign of weakness, and that is our first opportunity. So basically closing could be here for this trade, because you don't know really in advance that the market is going, to drop after this gap another 300 points to the downside. Yeah, you didn't really know that it is going to happen all today. So you could enter and just hold for a bigger target, or you could place several short bets along the way. I did it like that personally, but if you use these zones otherwise and still make good money out of it, then kudos to you, of course. So this here was the first opportunity, closing here, and this was our first trade. And after that, let's go even to the 1 minute chart to observe these moves better. After that, we have this. So this was our major support for today, and we have a bounce from pre-market. Then market tested again, then made this kind of move that looks, at that time this was looking like maybe it is a false breakdown. When you look at this, and now time is running, and what do you see? You see that they are making lower highs here. That this, in fact, as soon, so if you go on long here, when you see this, that this is a lower high here, and they are making its way again to the zone, you have to exit your long position if you are going long here at all. By this time, it was very clear that the market is extremely bearish, that the market is having a gap down and going from it, and that the market isn't really, once they start doing this, that they are not really exhausted here. So this was our another opportunity for short, and with targeting from here either a small target to this gap and better target to go and try, especially if you had a winner already here, because this winner from here to here was like 50-60 points, and if you had that already, then you could hold this opportunity number 2 for longer. And to fully expect this reference isn't really there for no reason at all. This is 20% from the all-time high, and this is something that you should really expect to be some buyers there, some algos, traders, or whatever, you don't care. But you expect them to be here, above these reference points and above this December 6th gap. Now I showed already that on Twitter, but let us see that gap again. It is on my index charts. What is happening now with this? Okay. So that was really here. As you can observe, that was really a big gap, and top of this gap also can act as support as well as the bottom. So that was the first usage of this gap. So basically this gap is from here to here, all of that is gap. And so closing of this opportunity was either here or here. And that is your second trading opportunity. And if you miss that or you want to add to your position, this was another opportunity. Back test of this first gap from December. It was filled, and then the price made a back test. And whenever you have this kind of movement to the downside, you can use fib retracements also, and enter at the confluence of the fib retracement with the levels and the zones. And then after this move here, that was the opportunity. I personally missed that one. From here to go long with your order above this reference point and stop right here, and to use as a target fib retracement from the last swing available, and this is it. As you can see, look where the end of this move is, right at the 61.8. And remember, whenever the market is volatile, whenever the market makes a big range, whenever DAX makes a 250-300 point move, use fib retracement. It is a very, very useful tool. As you can see, here is where this move died, and that is your exit for the long trade. Of course, you don't want to be picky and be penny wise pound foolish, so to speak, and to ask for that last point or last tick on the 61.8 retracement. Go for the halfback. Go for 5 or 6 points below it to get a feel. It's better to miss 5 points than to get a break even. So here is your exit of this long opportunity. And we can also observe that this was some kind of range here, and it was lasting for quite some time. And then when the market broke finally this zone that is consisting of these two reference points, gap from December 6th top and this minus 20 point from all-time high, and it's done its move and start to doing this, and that chop was also visible on the US market, that you could again use your fib retracement tool and observe. I have shown this on Twitter that the market is stalling again 61.8 of this move, and that was another short opportunity with expectation that market is going to tag 800 level and maybe go even to this gap and fill it. And why would you think that? Where? Imagine this market is moving like this, and now it's dead like on 10,838. That is not what usually is going to happen. If the market comes very close to the level that, as I said, act as a magnet, zone is getting closer, could act as a magnet, and it is acting as a magnet. There is a gap that is hanging there for 2 years. Market ain't gonna go this close to it and not to tag it. It is a very rare case. And if you rely on a depth thinking with this fib retracement, and of course you got confidence because market is going your way, you are shorting it, you are making money, and then you are shorting here it again with this idea of market is going to tag 800 or gap, and this is your exit wherever, here or at the gap itself. And then you observe the market is going parabolically, in parabolic fashion, to fill this gap. You could enter this trade in advance, or you could step aside for a bit and observe. I got in it like here on this second green candle with my stop here and exited in this small chop here. So maybe this could, provide this zone. Maybe it could provide a swing trade also. We don't know that yet, but I think this zone can be tested again, maybe maybe tomorrow or some other trading day, so we will see. But this here is a very good, sorry, this is S&P, and this, this is S&P also. This zone here provides very good support, because there was a 4-month trading range between 10,200 and 10,800 with untested breakout, and it is now tested. So it would require much effort to go through all of this, and it was logical to see some bounce from it. Okay, that was it about this trading opportunities for day traders for today on DAX. And now let's go to the higher time frames and observe. This is a 30-minute chart, but I showed on Twitter like 4-hour chart. Look at how S&P now is looking on a 4-hour chart. And what did they do? What did they do here? They made just a small false break of this here level, and basically immediately went up, as you can see. Also on higher time frames, this is it from daily. So you could see this level in advance. This is basically a crossroad of this level around to 625 to 630 horizontal level, and this here trend line of this channel. So it would be logical to expect from here a bounce, and it is happening right now, and it occurred here when the mini S&P futures were already like 2.5% down, with VIX barely moving above 25, and that was also a tell that the market expects that this support will hold, and we have a good bounce from it. In case that this bounce fails, and that we have a bounce like to here, and then our market rolls over again to this trend line, now keep in mind that could be very dangerous, as I have shown on the weekly chart. This different perspective when you look at the weekly chart, and this is this big mama support around around here. I know that it looks funny, but if you draw fib like this, you will get a confluence on these tops from 2000 and 2007 with the 61.8 Fibonacci, and only a move if this channel cracks, you know, if this channel cracks big time. Look at where the 38.2 Fib retrace is, not to mention these lower things. That is the look on the S&P. So buyers, you know, bulls have to defend, really have to defend this. If we get another push here, another attack to this level, it could crack and then open door for a bigger downside move. Let's go to the DAX. Let's go to the futures chart of DAX. This is weekly chart of DAX with some, let's delete this for now and observe just this trend line dating from September 2011, and this is current weekly candle touching the support level now. So we don't know until the end of the week what would the closed candle would look like, but for now this trend line is broken, and if we calculate the target for these head and shoulders, it would be around here, around 10,000 or 9,900. Another scenario was this circles that was on the chart before. Let's go to the daily chart and observe this kind of situation on it. I found a similarity between this pattern, what it looks like, and this pattern here. This pattern was after the January drop from this year. So that there was a big drop, then a pullback. It was also in confluence with the fib of this, then a lower low, pullback, another lower low, and then a rally. and we have this is very similar. Drop, pullback, lower low, slightly lower low, pullback, lower low. And now we are on the very good support, and the next move could be to the upside. And where it could be the end of this, we don't know, because we don't know if this is going to play. This is a bullish scenario, and the bullish and the bearish scenario is going to the 10,000 or lower. And this is bullish scenario. In order for this bullish scenario to work, bulls have to keep the DAX above 10,800 and to gradually move their way up, and to close, let's say, next week above this trend line. That would be bullish scenario. And that is all for me, from me for this video in which I covered DAX and S&P, and for tomorrow you will get another updated chart with adjusted zones. I wish you good night and good trading.